Oh my God, this could crash everything for the markets of US and Europe and around the world. And it comes from action by the Central Bank of Japan. Huh? Do you know how that works? Okay, so what's been happening is that the Central Bank of Japan has just tweaked their yield curve, right? And before you think that's not important because it happens in Japan, as I've told you just now at the start of the video, that this is actually really, really important for the United States and for Europe. Why is that? Because Japan is the number 3 largest economy in the world, right? And their money goes to everywhere in the world to help other people purchase their bonds. And what are American or European bonds? It's when the US government needs to borrow money, they issue these bonds, commonly known as IOUs, right, to raise money for the US government. And they would borrow something like $276 billion in 1 month, right? America's borrowing beans needs an urgent fix. We all know this. It's like a drug addict. And the problem is, US quite a lot of times relies on foreign buyers for their national bonds, right? And this affects all markets. This is going to affect the stock market in the US and Europe. It's going to affect crypto and Bitcoin. Because the US bond market and European bond market is larger than anything that's out there, right? Except housing. So what happens is, who buys those bonds? Well, China used to buy a lot of those bonds, and China's not buying much of those bonds anymore because, decoupling. And now, so Japan is the next biggest buyer out there by far, right? But yet this action they're doing back with the Bank of Japan will affect them, how much they buy US bonds. And the evidence is very apparent. I've been telling you guys, see, the US 10-year and 30-year yields are spiking up above 4% now. If inflation's only at 3%, inflation has fallen, CPI right now is at 3%, but why are bond yields up at 4%? Why would you care about US bond yields? Are you kidding me? This is everything. So you know how everyone cares about whether the Fed is hiking interest rates or not, right? Everyone's like, will the Fed hike 25 basis points interest rates this week or next month or whatever? Well, bond yields are interest rates, not for right now, but for the next 10 years, for the next 30 years. So Japan doing this is like hiking interest rates for United States and for Europe, for Australia, for Canada, for the next 30 years, for the next 20 years. How does this work? See, because Bank of Japan now lifted their own long-term 10-year bond yields, therefore, US bonds become less attractive. So there's less buying of US bonds, and that means more buying of Japanese bonds. That means US bond prices go down, but yields go up. So unlike the Fed, which raises United States short-term rates, now Japan is accidentally, unintentionally raising United States long-term yields or long-term rates, making borrowing harder. That's going to crash the stocks in a few months.